Eric Mwathe with Mwathe.com with world market analysis for the weekend of April 2nd and April 3rd, 2016. Let's take a look at markets here in Asia. At the close of Friday's session, which is the first day of the month of April, we see that pretty much the bigger moves are to the downside. Take a look at European markets after Friday's session. Also, we are looking here at the end of the Friday session. Markets were pretty much net to the downside as far as major averages in Europe. Take a look at the Americas as we go to the last 2 hours of trading on Friday, and we have a mixed bag. We can see here Brazil is higher, Canadian market slightly lower. Take a look at the US markets with about 2 hours to go, and again the US markets are higher for the day, and right now up about 0.5 to 0.6 on the major US averages. We see that gold is down about 1% and crude oil is down about 3.6%. So let's take a look at world charts. We begin by taking a look at the Australian market, which again was down on Friday. And here we can see that we had shown a line of resistance on the weekly chart. I guess you can draw it something like that, connecting weekly closing highs, and we are still below this, which is a resistance band. Until we can clear this line, one can assume that market should be trading below that and for the most part pushing lower prices. Also, we can see that we had come back to test the break line of the previous high. So there was a break here in the RSI. That break sometime in May brought the market off those levels, and we can draw a line from there which is slightly above the 50 line. And as we discussed over the last couple of weeks, we've been coming here and hitting that line, which also happens to be around the 50 level on the weekly RSI. All these have been resistance areas, and now we are seeing this also becoming a resistance area. So net looks like a market that wants to pull back until it can clear that 50 level on the weekly RSI. There's also a line connecting the previous break line or support line here. So this line, you can see there was a break here in August for this huge drop, and so we can extend that line something like that, and you can see that since the break here, this line has hit and shown resistance, leaving the market to a pullback. And now over the last couple of weeks we hit that line, and now we are pulling back. So net we are looking at a market here as far as the Australian market is concerned, showing that it could easily be setting to go lower. In fact, take a look at the monthly, and if you take a look at the recent monthly closing highs here, and also right there, you can draw a line which is a trend line, something like that. And the market has come over the last couple of weeks, has been unable to move above this line, which is a weekly resistance line or a monthly resistance line. So as long as we are trading below this line, we are suggesting here that more than likely the market continues to struggle. Now keep in mind that the market did pull back on Friday, trading at about 5,000 now, which brings the possibility of the market eventually moving below 2016's monthly closing low. The level to watch there for potential break is 47.90. Anything below that would suggest a fresh monthly break, and would also suggest that now the bearish argument could be getting very loud. So anything moving the market below 47.90 would suggest that we are back to a down market, and a strong down market at that. The reason being that if it breaks down, that would also correspond with the monthly RSI moving to fresh 3-year lows, MACDs staying at 3-year lows, which is a sign of a market that is very bearish. So if it cracks back below all this moving to 3-year lows, that would be a signal that the markets are to be played to the downside in the here and now. Again, the level to watch is the previous 2016 monthly closing low of 4947.90. If it cracks through that, otherwise if it holds above that level, maybe this pullback on Friday is just a shallow move before it bounces. But for now, the threat of a down market is back on the table. Let's take a look at the Japanese market, and with a down move on Friday, we can see that the line we were drawing for potential break, so this line here, the break coming into 2016, and now was being tested over the last couple of weeks. We hit that twice over the last couple of weeks, and that seems to be good enough double top on the weekly, suggesting that for now we are still back to a market that generally wants to pull back based on the weekly resistance. Take a look at the monthly, and the monthly chart is now starting to look a little bit questionable because this is the close of March. It doesn't reflect Friday's move. Take a look at Friday's move in Japan, and it was down about 3.5%, bringing the close at 16.4. So we are looking at, let's go back to the chart here. So we are looking at a market with now the potential of coming back to break the 2016 monthly closing low after 1 month of rest. So we have to be careful here, because should the market move below 16,026.76, that would be suggesting that we are back to a bearish market. Any break of that close would be very bearish. Keep in mind that that would also coincide again with monthly charts turning very bearish, turning bearish. If we break through that, a move to 3-year lows on the RSI, and take a look at the MACDs, which are already at 3-year lows. This is suggesting that if we break through 16,026, that is a market that one has to be playing to the downside, because that's a major break. So the key is whether we can hold above that threshold, and again 16,026.76. A break of that would be absolutely a sell signal for the Japanese market. Take a look at the Nifty weekly here. We can see that it closed with its weekly RSI at 50.84 this past week, and so be aware that if it moves below 50 on the week, it moves below 50, one can expect a big down week. Also, we can see that if you take the weekly closing high there and a weekly closing high there, you can draw a line, which short term is a problem because it connects to a previous recent weekly closing high, which is there. So as long as we are showing resistance on a short-term chart here, on a 1-year weekly chart, until we can move above this channel resistance here, one can assume that the market continues to struggle and could pull back. Keep in mind that off the lows here of February, we've had a nice move, and so maybe a pullback would make sense. Take a look at the weekly, coming back to test the recent break of August. This break here, market hasn't been back to those levels, and that line has been a problem in the short term. As you can see, we hit that line at the highs of October, which is during that period, and again we are coming here and we are still showing resistance. So as long as we are showing resistance at the red line and also resistance around the 50 level on the weekly RSI, one can expect a pullback. Take a look at the monthly chart, and here the risk for the month is that if we move below RSI 50 on a month-to-month basis, here we are trading at 51 and change, but should we slide below 50 for the month, expect a big down month, and that's the risk. Keep in mind that we had a solid month in the month of March as the market moved above 50. So now the risk here is that we stumble, move the RSI below 50, and have a substantially big down month. The hourly chart, on the other hand, for the Nifty does show some type of sideways action for now. As you can see here, that there is a line of resistance on the top side of the hourly RSI, and I'm using RSI of period of 26 on my hourly charts in case it looks different from yours. And also we can see that there's a line of support on the downside. So we are stuck in this wedge. Eventually the big swing trade is gonna come either with a breakout for a nice move higher or for a breakdown for a move lower. So right now it looks like a wedge is forming on the hourly. Eventually a movement either above or below the wedge would suggest where the next swing trade is, even though as we've seen on the weekly and on the monthly, more and more the risk seems to be on the downside based on where the RSI closed, which is slightly above the 50 level on the weekly and above the 50 level on the monthly RSI time frame. If we take a look at the South African market by way of the Dow Jones South Africa Stock Market Index, we can see we are coming here and with a slight move lower beginning of April. We are coming back to test this break point that goes back to 2008 on this long-term monthly chart, all data on the monthly, and we can draw a line from there. And you can see that this line has been used as support on the way up. Hope you can see that. And here we can see that there was double bottom support back above the red line for the lows here. Double bottom support back above the red line for the lows during this period. Right now we are looking at the potential for the exact opposite, which is double top rejection on this red line. In fact, you can also see that there's a double top rejection during the highs somewhere here in 2008. So now we might be looking at the possibility that around here this is a reversal signal. As long as the market is down for the month, it suggests that net the monthly charts are now turning down and we could be setting up for a movement lower. This is perhaps the most bearish looking chart across the globe on all the markets that I'm following right now, which is a French CAC 40. The reason why I say that is after closing higher for the month of March, we've opened August by moving below the monthly closing low for 2016, and the level there that we need to watch, because right now it's being violated, is 4353.55, and we've already moved here. This is the close of last month or the close of yesterday. If you take a look at the break here, I guess the close of Thursday, if you take a look at Friday's action, we've moved below that monthly closing low, suggesting that right now, and that's why I say this is one of the most bearish looking charts, which might not be a good sign for markets across the globe, is right now with the move on Friday, if it sticks, is we are moving the monthly RSI to 3-year lows. The MACDs are already trading at 3-year lows or close to 3-year lows, which is pretty much meets the minimum requirement here for a major drop in world markets. So the risk here is that this market is very bearish. In fact, let me show you the close of Friday as far as the French CAC 40 is concerned, and you can see here was down about 62 points, closing at 43322, which is well below our threshold, which is at 4353. So again, just to repeat that, we are below the close of 2016 monthly closing low. The level there that we need to watch, if it stays below 4353.55, that's a major sell signal. So this is probably the worst looking chart out there, and if this chart is true, it suggests that most of the world markets are gonna be under downside pressure in the coming weeks and in the coming months. Take a look at the German market here, and again, remember, had a lower move on Friday, which was the first day of April 2016, and here the risk also is that it goes on to break below the closing low for 2016 on a monthly closing basis. The level to watch there is any movement below 4795.40 would suggest a market that is in serious trouble to drop and drop like very hard. So keep in mind that that would suggest that if it breaks below that number, that the RSIs and the MACDs would be moving back to 3-year lows, on the MACDs, and if that happens, RSI break, MACDs at 3-year lows, that would suggest that that's a minimum requirement and that the markets are in serious trouble. Keep in mind that on the weekly we are talked about the top side becoming resistance, and we are seeing that right now that seems to be correct. The market is struggling to hold above that line, and so for now most of the pressure on the charts here, the weeklies and the monthlies, are pointing to a German market that also wants to pull back. take a look at the Footsie, and here we can see that again coming back and struggling to hold above this break point on the weekly RSI. We broke through here, which was May of last year, off the highs. We haven't been back to those levels, and we can draw a line which happens to be slightly above the 50 level, which has been a problem since that break. Over the last couple of weeks, we've come back, we've hit that line twice, showing a double top, and now we are still below that level. So net, this market seems to struggle here. If we take a look at the monthly, we can see here that the risk is it breaks below 2016's, actually 2015's monthly closing low. The level to watch there is 6,061.61. Anything below and back below that threshold would be a major sell signal, because at that point the RSIs and the MACDs on the monthly would also be moving to fresh 3-year lows, which is the ultimate sell signal. So should we crack down here, that would be a major sell signal, suggesting a market that could easily drop significantly. Take a look here at the possibility that what the market bulls want to see is that the Footsie eventually gathers enough energy, enough momentum to break out above the recent monthly, in fact the recent weekly closing high, and the weekly closing high there to watch is 619943 on a weekly. This is this weekly close here for the month of February. Any breakout above that would be good for market bulls. Otherwise, right now, net, most of the charts are pointing to a market that wants to pull back. As you can see on the daily, for the Footsie, we've been struggling for quite a while to hold above this RSI line. So that's the challenge. We've been failing to move above that line. Every time we try and move higher, we find resistance on that line. And so until we can clear the red line, one has to assume that the pressure net is to the downside. If we take a look at the Canadian market, we can see here that it is still, in my opinion, coming back to test the RSI resistance line, which has been a problem since this break here. So off the highs of 2015, that was the RSI break. We can draw a line from there, which is what is being tested right now. So this red line right now is becoming a problem. Until the market can clear and move above that red line, one has to assume that the market still net might continue to struggle. So we need a breakout above that line. Also, market bulls would like to see a breakout above the recent weekly closing high for 2016. The level to watch there for potential breakout, which is what the bulls want to see, is if the market can move above 13,522.00. Any breakout above that would be great for market bulls, suggesting that at that point the market would have cleared the short-term weekly resistance. But really, if you drill down to the hourly chart, you can see that we are stuck pretty much in a range. If you take the top side resistance and the bottom side support, you can do it like that, we are stuck in this wedge. So the true direction in the market will come when we move either above or below that threshold. So we can watch this for the eventual direction. A breakout would suggest that the next swing trade of any meaningful direction is going to be higher. Otherwise, if we crack through that, then we can see that the next major move short term is going to be for market to move lower. If we take a look at the Brazilian market, we can see that for the month of March 2016, it had an amazing run, almost high by 17%, somewhere in that range. It's a great move. Keep in mind why the reason that was is because the RSI closed above 50 on its monthly RSI, which was closing at or closed at 50.76. Now, even though it's opening the month higher, the risk here, in my opinion, is that in the month of April it slips back below 50, should the market move below 50, that would suggest that there's a huge down month in play. So just watch for this. If it slides and the monthly RSI moves back below 50, that would suggest that there's a huge down month in store. Keep in mind, we've come long ways off the lows here. This is probably one of the strongest recovery in a market, in the recent market move. Nice move here, and I think after such a strong move, it would only make sense that this becomes a little bit of a problem. So watch for that. Any stumble that moves the Brazilian market back to below 50 on the monthly would suggest a big down month whenever that happens. In fact, if you take a look at a long-term weekly chart, so about 13 years of data here, and if I take a look at the break, draw a line somewhere around here, this line corresponds with this break here in 2010. So this RSI break brought the market off those highs. Since then, this red line has been a problem and a resistance area for the market for nice moves lower for those who were bearish at the time. And even here there was another break back below the red line for a move lower off 2014 highs. We touched that off the highs of 2015, and here we are touching that line in 2016. So net, as long as the market is showing rejection and resistance on that red line, for now we have to assume that it makes more sense to look for this market to stall and to move lower. Otherwise, if you are bullish on the market and you want the market to move higher as far as the Brazilian market is concerned, then you'd like it to break out above the recent weekly closing high for 2016. The level to watch there for potential breakout, which would be bullish, is if the market can move above 50,814.66. So we shall see whether the market can break out or whether the weekly charts are suggesting around here is where it stalls. Eric Muadhed, muadhed.com. Gonna leave you here with the US market with about 1.5 hours to go, and markets are trading with the Dow up 93 points. Eric Muadhed, muadhed.com. Good luck, peace, and blessings. I see.